Welcome. We're back on this beautiful Monday morning, rearing and ready to go for another week of market chaos. Let's do it. Welcome, guys. Welcome to those of you that joined the Patreon and the Bid and Ask Nation yesterday, which was August 1st, first of the month. I know we had a huge influx of new members, so it's great to have you guys, and let's get rolling with it. So futures are up. They're down a little bit from what they were earlier this morning. We have a lot of acquisition news. I saw Foot Locker acquired 2 companies for $1.1 billion in cash. Square acquired somebody, was it for like $29 billion? Well, we could just take a look real quick, and there they are, the top trending ticker. Square acquires Australia's Afterpay for $29 billion. It's no surprise that, let's click on this, and we'll see the company that's being acquired typically goes up. The risk is off of them. They're going to get whatever price they're going to get for their stock. I'm assuming it's $115 a share, but who's to know? Square is down pre-market 3%. No surprise there. So we'll keep an eye on that. If you want to trade it, go for it. If you want to invest in it, I don't think I would do that just because Square is a very, very overvalued stock. But the good thing is Square is great for day trading. Square is one of those companies where, let's look at the beta. You guys know, those of you that have been around a little bit, when you always ask, where do you look for companies that you want to day trade? Look for companies with a higher beta. Actually, this is a pretty small beta. Beta just means how much it moves with the market. So if the market moves theoretically 1 time, beta will move, this will move 2.4 times. So maybe 2.5 times as quick as the market. So when you're looking for companies to trade, day trade, you want a little bit of quote unquote volatility on there. Go ahead and look for things like with higher betas. And to be honest, back when I was day trading this was a 3.98 or 4.1 beta. It was a really, really high beta. So, all right, let's get into some stuff. What do I want to start with? Well, let's just start with the week in general. This week, we have the jobs report coming out on Friday. We have a lot of economic data coming out. The funny thing that I saw is here, they are expecting to increase in July by 900,000 jobs. Great. Going back to April, remember when it was supposed to be 1 million jobs are going to be created? It's going to be 1 million. It's going to be 1 million. And we're still not at 1 million like 3 or 4 months later. So that's pretty funny. Companies like Caterpillar have cited that, and we know this, we saw it on Friday, they had their earnings, maybe it was on Thursday. They've cited higher compensation costs, labor-related issues are weighing on the business, they're getting beat up, inflation is costing them in terms of how much they're spending on all of their metals and materials. According to Bank of America last week, labor and wage-related inflation references have been up by 107% year over year so far in the second quarter based on the earnings calls. So that's a lot of increase. Let me just scroll down here and show you the economic numbers that I'm paying attention to this week. I want to see the manufacturing data that comes out today. I want to see the durable goods orders tomorrow. That just gives me a kind of a basis of where things are moving with the economy. I always like to look at durable goods. I like to look at materials. I really like to look at shipping and what those are doing. That kind of gives me a 500-foot, 1,000-foot view of what's happening in the overall economy. And remember, the stock market is not the economy. The stock market is not the economy. The stock market is not the economy. No matter what any of these bozos want to tell you, the stock market is not the economy. So actually go look at economic data. Mortgage applications are Wednesday. Initial jobless claims, I don't really care about on Thursday. Non-farm payroll, unemployment, that's what I care about to see on Friday. So keep a watch on those things, guys, if you're interested in seeing what the economy is doing. Let's see where the labor shortage. So there's plenty of jobs out there and still unemployment. So I highlighted a couple things in here. Some of them, I get it. Many explanations are offered for this separation, including lack of affordable childcare, keeping parents out of the job market, fear of COVID-19 being in the workplace, the effects of generous unemployment benefits in some states, including the extra $300 in federal payment. That ends on the end of September, or it's September 1st. I don't remember. Finally, the pandemic has spurred a widespread of reassessment of work-life balance. People work from home. They realize life doesn't have to be miserable going into the office 60 hours a week or whatever it is. The extra jobless payments have been ended in about half the states and will expire in early September, so probably September 1st or September 15th. And then I assume at that point people will go back to school. But look at this number right here. In its latest survey in March, this consumer, what is this? The Fed. One number that labor economists use to gauge willingness to work is the reservation wage. The minimum paycheck that someone could accept for a new position. The New York Fed tracks the survey of consumer expectations and breaks it down among demographics. In its latest survey in March, it found that the mean annual reservation wage was $71,403, surpassing the high amount needed to lure someone to a new job. That represents a hefty 15.66% increase from a year earlier. That's crazy. And it was at a generational low pre-pandemic of 3.5%. That is just wild. Things are just so out of hand right now. When I was reading this article, I highlighted this just because I don't know why it dawned on me this morning. I've said it before, but it really hit me this morning. The Fed has said that maximum employment is their goal to get to the point where they start tapering and doing interest rate increases. Maximum employment. I don't know. Maximum employment seems what it was pre-pandemic. That seems a little far-fetched to me. I just think they're just going to keep working the market with whatever quantitative easing they have to do. This is another good one. I sent this one around this morning to some friends. Treasury Department is to invoke extraordinary measures as Congress misses debt ceiling deadline. The Treasury Department, and I think this is probably an article that I'm going to post in the Bid and Ask Nation for you guys to read. I could basically just highlight the entire article and read through it, but I'm not going to do that. I'll read a lot of it, though. The Treasury Department will be conducting emergency cash conservation steps on Monday to avoid busting the federal borrowing limit after 2-year suspension of debt ceiling expired at the end of July. Economists say the so-called extraordinary measures will allow Treasury to pay off its debt bills without floating new debt for 2 or 3 months. After that, Congress will need to either raise or suspend the borrowing limit or risk the U.S. defaulting on its obligations. They did it before. They did it during, I think they did it during the Obama administration, if I remember correctly. So it's been done before. The risk of defaulting, I'm sure it's extremely low, but Yeah, it's incredible. This is just incredible. These are two things that I highlighted that you guys should read. I'm going to post this in the Bid and Ask Nation. The government needs to have the funds, for example, to pay the interest on debts, and if it were to stop paying its interest on debts, it would be extremely unsettling for financial markets. It's getting interesting out there. That's all I have to say. What I should do right now is pull up my little schematic that I drew of how the Fed and the government send money back and forth to get money off of balance sheets, etc. But I'm not going to do that because it looks like a 3-year-old drew it, because some of you have seen my drawings before and they're not the best. So I will get to that when I make it a little bit cleaner. I will do that today and I will show you tomorrow. Next, the Fed's Lael, I think her name is Lael. Yeah, Lael Brainerd. She's the Fed governor. She basically said that a digital currency is coming to the US dollar, which it was only a matter of time. When you have other countries that are doing it, it's going to happen. It is what it is. So Federal Reserve Governor Lael Brainerd on Friday laid out a range of reasons for urgency around the issue of the U.S. developing a central digital currency. The dollar is very dominant in international payments, and if you have the other major jurisdictions in the world with a digital currency, a central bank digital currency offering, then, and the U.S. doesn't have one, I just can't wrap my mind around that. Brainerd said at this group. That just doesn't sound like a sustainable future to me. So whether it is them creating their own digital currency or acquiring one of the 6,000 or 16,000 or 60,000 digital currencies that are out there, who knows? Yeah, that's going to happen. And Jerome Powell said earlier, I think he said 2 or 3 weeks ago, they're going to do it anyway. So we know it's coming. But this just tells me you're not going to have, you might have Bitcoin around forever or crypto around forever, but it's not going to be in the same format that it's in right now. There is a very good reason why all hedge funds said that 70% of hedge funds said that by 2026 they will have cryptocurrency in their portfolios in some capacity. That's because it'll be regulated by the government and it'll just be called crypto, and it's not going to be the same crypto. Anyways, Foot Locker. They're buying 2 shoe chains for $1.1 billion. Now, Foot Locker was something that I owned around the time of the pandemic. I also owned tons of puts on this around the time of the pandemic because it was a very good value play. Question that came into hand was Foot Locker going to be around basically in 5 years from 12 to 18 months ago. I wasn't sure, to be honest with you. I mean, I don't know. When I think of, maybe there's more shoe people out there, but I don't think of Foot Locker when I go and buy shoes. I just go to Dick's or Amazon. So Foot Locker will buy 2 small, but I think I've been proven wrong. So Foot Locker will buy 2 small shoe chains for a total of $1.1 billion in cash. The company is buying California-based WSS for $750 million and Japanese streetwear retailer Atmos for $360 million. It said in separate statements. WSS has 95 off-mall, this is the most important thing to me, off-mall stores around California, Texas, Arizona, and Nevada. Atmos has 49 stores in Japan, and they have some kind of collaboration with Nike, so that does tell me that they are going to be A-okay. So, pretty interesting stuff. I guess I want to take another look at Foot Locker, but even so, the stock price is at $57 a share, and I think my max price was around 45 to 50, I think, if I'm just remembering off the top of my head. All right, Alibaba. So Alibaba reports on tomorrow. So if you're trading this, be careful with it. If you're invested in it long-term like I am, I hope that they totally fall apart and the stock price goes to $150. And I think that you should think the same. And if you think that, well, good job, because you're doing a very good job understanding this stuff. So fiscal Q1 projections. Oh, this was funny. They messed up the story. Release of fiscal quarter 2022 earnings August 3rd. Wrong. All right. So Alibaba's prior quarter snapshot. I was just interested in looking at the previous numbers. Their revenues came in 64% year over year. They finished the year with 811 million active shoppers on its China retail marketplace. That's an increase of 32 million from the previous year. So that was incredible. They have 4 major areas that they look for revenue: core commerce, cloud computing, digital media and entertainment, and innovation initiatives. Maybe it's 5. Alibaba's commerce business, reflecting an increase of 72% year over year. The cloud-based service it increased 37% year over year. Let's see. Alibaba should also investors should also pay attention to Alibaba's key metrics such as mobile active users and annual active consumers in China. Mobile active users came in $925 million in the last report, up almost 10% from the previous year. So Alibaba's just, this is why we're just, Alibaba's incredible if they can just not be fake news. All right. I am going to look at treasuries real quick. I'm sure nothing happened there. Treasuries are just kind of the same. Actually, the 10-year ticked up. Let's look at earnings for tomorrow. Let's see. Is there anything after the bell today? No. Let's look at tomorrow. So obviously, Alibaba's tomorrow. Nikola's tomorrow before the bell. Under Armour. Corsair. I know a lot of you guys are in Corsair, so be careful with that. BP reports tomorrow before the bell. So big earnings coming up this week. What else do we have? Roku on Wednesday, Uber Wednesday, GM, Square is Thursday, Virgin Galactic is Thursday, Beyond Meat, Moderna, who's now part of the S&P, Friday, Ocugen, the worst company of all time, Norwegian Cruise is on Friday. Yeah, so you got a lot of stuff this week. Just pay attention to it. If you want to join, prices have gone up, so here you go. And they're gonna keep going up, guys. If you want to join the Patreon, well, we're gonna be off Patreon pretty soon, but Discord chat, $7 a month. If you want the software and Discord, $26 a month. If you want to be in the Bid and Ask Nation with me, $76 a month. And obviously, you get all the software. If you want to do a 1-hour consult with me on Zoom, I've had two people do it. $500 for 1 hour. And if you want to do a real estate deal with Paul, $2,500 for 4 hours of his time. So that's it. Send me some stocks. I'm going to look at Pinterest while you guys do that because Pinterest has just been slaughtered. It's down like 26% or something. So I put this on the watch list this morning in the chat because this is great. I will gladly take this gap is 100% going to fill. It's going to take some time, but it's going to fill. Yeah, this thing's going to swoop down and it's going to run right back up. Hey, Cash or Nick or Noah or Caesar, if you're watching right now, write this down for the gaps idea that I had. Let's write that down for that because this is one of those ones with the gap. And if you guys see here, this was a big gap. This was their last earnings call. Big gap fell. Stock price it just continued to get pummeled. And then, of course, it filled the gap. It filled the gap in that quarter. Now we're doing the same thing again. So I'm hoping that we get a repeat of that and we catch the run up. So Pinterest, baby. All right. I had NLY. Somebody asked me about that early on. They pay a great dividend, but I think they're a REIT. Maybe they're oil. I don't know. All right. So you are definitely facing resistance right here. There's no doubt about that. And what price is that at? $8.60. Yep. And if you run it right over here, you're dealing with the 100-day moving average. So, sir, I don't know what to tell you on this one. If you own it, you should be short. And even if you're short, I don't think you should be going crazy with it. To be honest with you, this is probably more of a play just to be in it and collect the dividend and whatnot. But what do I know? You're just holding real tight at the 200-day moving average. So if you drop below here, below the 200-day moving average, you're going to be okay. But just keep rolling with that. All right. Next, Big Chungus asked me ARNC, Arconic. The only Arconic I know is the Arconic spelled with a K that does the Land Rover Defenders. All right, let's see here. Is this new? Oh, no. Okay, good. Oh, wow. This is a pretty good run up. So let's zoom in here. So shorting it, I would not be doing just because you're sitting above all these moving averages. I would let this red line turn on top of the yellow one, like so, and just start making brand new all-time highs. If it does that, get into it. If not, just be patient and don't touch this thing. Next. GM, okay. GM. What do we have here? This is very interesting. I'm going to look at a couple things after this, but just because I want to see what's happening. All of these companies. So if you can just see that with GM, you're just consolidating right in this, let's call it 60 to 55, 54. You're just hovering right in there with a little bit of a pop here and a little bit of a drop down here. So this is nothing too special right now. You just have to be patient. I wouldn't even short this, but I wouldn't go long on it either. So I want to look at XLF right now, see what's happening with the banks. So the banks are, so everything is basically consolidating sideways with the banks. Let me zoom there. There you go. So you can see that the banks are just doing absolutely nothing. They're just sitting here between their 50-day moving average and 100-day moving average, just sitting and doing nothing. So let's do, what else do we have? The banks. What else do I want to look at? XL. Yeah, I don't remember. I can't remember. All right, let's see. Momo. Why does everybody want Momo? Didn't we just do Momo last week? Momo was getting into some kind of No. Okay. The reason I chose Momo and then said no to Momo, it was because of this. The last time Momo got into, you had to fight through these 4 major moving averages, which I didn't love. And I remember liking it in here on this chart. And then I took a peek over here and saw that you just had to go through 4 moving averages. You had great volume. That's what got you through there. But even right after the volume fell off, look, the stock price fell right back down. So if you can get a little run up and you want to compete with moving averages, if you're getting volume, sure. But look at, you're getting big time decelerating volume right now. So I do not think that is the best play right now. I think I might go at that thing from a day trading standpoint instead. All right, let's see here. Home Depot. Mo, I paid the next 3 years of my Bid and Ask Nation off of my AMD trade on Friday. There you go. All right. Good trade. So here we go. You're actually moving through the sweet spot. It's Home Depot. They're always moving through the sweet spot. This company's incredible. Them and Lowe's, it's basically exactly the same. I think these are on my watch lists. If you get a breakout over this number here, 331.76. No, that's not right. Hold on. If you get a breakout over 333.50, I think you can add at 333.50 there if you want to. All right. FDX, is that FedEx? I'll just share one more time if you have a chance. Okay. All right, here we go. FedEx. FedEx has dropped on earnings. I don't know why. They're such a, it's funny. FedEx is such a volatile company on earnings. It's just so strange. But if you look at this. They're sitting right. They fell like literally right on top of their 200-day moving average. Let's zoom in here just so I can show you guys. Look at that. It literally fell. The stock price fell down here, ran up here, and then it closed exactly on its 200-day moving average. These things are freaking powerful. And even look at this day. The price dropped, and then it just bounced right off its 100-day moving average. Today, it's going to open right above its 100-day moving average. So moving averages are very powerful tools. All right. NEO. Why does everybody want to look at NEO? That's interesting. Usually when people send me this stuff, it has to do with some kind of big movement on the price, but I don't see any big movement. So with NEO, no, this is terrible. It's going your stochastic is just running sideways. So I don't really, and frankly, you're in between major moving averages. So you either got to get above it or below it. And your volume is just incredibly inconsistent. So not surprising. Facebook, that's one that I wanted to look at. I wanted to look at big tech. That's what I want to look at. XL. Is it XLV? Somebody tell me what the S&P tech sector is, please. It's XL something. Please type that in there. I just can't remember off the top of my head. All right. Facebook is technically a downtrend right now, but it's sitting right at its 25-day moving average. It's trying. So don't short this thing. Be very patient with this. Let this thing get some kind of direction. Let this red line get down here into the sweet spot before you start doing it. And definitely let the yellow line get down here too. The wider the separation on the red and yellow line, the better you're going to be here, because this is tech. It's led the market all the way up. It can turn on a dime and just start moving up very quickly like this on you. So keep an eye on Facebook. XL. Okay, thank you very much. I want to look at tech. Okay, so when you get big pullbacks in markets, like those days that were down 2-3%, etc., you get these big snapbacks. So I'm not seeing that right now. Anytime you get big volatility, the tech is the one that leads it down, just because tech leads the market for some ungodly reason. So this is where you need, if you want to do something on the tech sector, or you want to keep a watch at the entire market, see if tech makes new all-time highs. If it doesn't, then I don't know what to tell you. Keep an eye on everything, because tech is going to lead the market down just as quickly as it's led the market up. I mean, in an ideal normal world, whoa, Dillard's? I don't know Dillard's was still a company. In an ideal world, you would have businesses like materials, shippings, this and that leading markets, not tech. All right. You're just stuck right here, consolidating sideways, not really doing anything. I did not know that Dillard's was still a company. I'm not going to lie. If you make a new all-time high, I guess go for it. That's really it. All right. Where are we? Twitter. Let's see Twitter. We were in Twitter. I think we made 7 or 8% on Twitter. We caught this run right here. It was this run right here. I think we sold in. So we were in it here. We were part of this drop, and I think we either sold on this candlestick or this candlestick. No, it was this one. It was this candlestick right here that we sold. So that was a good trade. You actually could have caught it here, but look at that. So when we caught it coming through the sweet spot. We caught this movement right there. We got it on these engulfing candlesticks. I knew it would fill the gap. It filled the gap, and then it kept trying to break into these. This was the support. This was the resistance point. So I was thinking when we get to around that $71 area, we'll be exiting, and we did. So right now, it's had a couple pops lately, but it's still $70.43. Still can't break through that resistance area. Still, look at the volume is just completely falling off. So I do assume that this thing will eventually turn into a downtrend, and you'll have some kind of short on it. So, all right, PayPal, PYPL. Whoops. Let's see what we got on PayPal. Oh my goodness. What happened here? Was it earnings? I'm just going to have to assume it's been earnings. Wow. You know, it's interesting to look at a chart like PayPal and see all of these gaps all over the place. I wouldn't assume that a company this big, this is like the one that we just looked at. Who did I just look at and say that FedEx. They move like FedEx. It's weird. So this is certainly a downtrend. You're going to have a hard time breaking through your 100-day moving average. That's where a lot of the hedge funds make their decision on whether to invest anything, go long, go short, leave it alone, do nothing. So this is a big point where hedge funds make their decision, is the 100-day moving average. So just be careful when you get down to that range. If you want to do a swing trade on it and short it, break through 276.15, run it down to whatever the 100-day moving average is, and then exit your position if you want to go short in that way. But right now, just be very careful with this thing. The good news is on PayPal, if the market continues to keep going higher, this is tech. This is going to lead the market right up, and it's going to fill that gap. All right. We sold at 70.70. So, Don, thank you for that. Don was part of that 7 or 8% gain that we had there. All right. Let's see here. BX. What's BX? Oh, Blackstone, of course. Oh my God. Okay. This is a power stock. So those of you that don't know what a power stock is a stock that is over all 4 of its major moving averages. Let me go here. So let's look at this chart for a second. A stock that's over all 4 of its major moving averages and making new all-time highs. So all-time high. And yeah, on a Friday or Thursday, it made a new all-time high, or maybe it was Friday. So let's pull up the other one, and the stochastic is for sure just going to be going sideways. You just go through the sweet spot, and you just go sideways for a very long time. So this is a great trade. If you're in it, add on a new all-time high and keep this thing running, because this is a great looking stock. All right, Andrea, you want MU. All right, let's see here. Micron. Oh, a little gap today. They just gapped right over their 200-day and 50-day. 200-day and 25-day moving average. So they've had a rough. I don't know, year and a half. So I don't know what to tell you. This thing is just. I mean, it's to me, it's too difficult to go short, and it's too difficult to go long right now. And if you want to go long on it, I think that you have to wait for this red line to move up into the sweet spot. But even with that, I think it's going to take a lot of time and a lot of volume. And this inconsistency in volume has just been no good for them. So, Disney. I haven't looked at Disney in a long time. What are they at? $7,000 a share now? No. Okay, that's good. All right. Disney's my favorite pandemic company of all time. They lose 40 to 45% of their business in cruises and parks, and they go to all-time highs. Sweet, makes sense. And it's because of their $5 a month Disney Plus subscription that supplements their 45% revenue from parks. Okay, sounds good. All right, so you're basically just stuck right here at between these moving averages. You're going to have a hard time getting up above 100 without any volume. So this thing's just moving sideways through the sweet spot. Do not touch it. Do not touch it. Gianni just said go trade MU on a 15-minute chart. So go and do that. All right, guys. 9:30, markets open. Disney is disruptive. Sure. I know you're kidding, Don. All right, let's see here. What's the market at? Market's up. Russell's down. I don't know. All right, guys. That's it for today. Tomorrow, I'm not going to be here. I have a doctor's appointment. I will be at the 1 o'clock show with me, Seth, and Paul. So morning show tomorrow, not happening. But I will see you guys at 1 o'clock tomorrow. You guys have a wonderful day. Talk to you soon. Bye-bye. Smash the like button on your way out.